Hello, good day, guys. My name is Nick, technical analyst with SuperForex. Today, we're looking at the analysis on the currency pair USD CAD, and as usual, we'll talk about fundamentals before we move right down to technicals, which will be purely what we've seen on the graph. Now, we can say that USD CAD has remained capped below the 1.3500 barrier, while we have our eyes on the US CPI data. The USD CAD weakens around 1.3478 on the softer USD, and Fed's dovish comments and mixed US February labor market data reaffirmed the expectation for a June rate cut. Now, Box McLean said it's premature to ease monetary policy despite a recent cooling in inflation, while some traders will closely monitor the US February Consumer Price Index CPI inflation data, which is due today, Tuesday. Now, the USD CAD here remains capped under the key 1.3500 barrier during the early Asian session on Tuesday, while the decline of the US dollar and the lower US Treasury bond yields weigh on the pair. Investors await the US Consumer Price Index inflation data for February, due later on Tuesday at press time, while USD CAD is trading at 1.3478, down 0.03% on the day. The mixed US labor data for February was not strong enough to convince the Fed of monetary policy expectations. Additionally, the dovish comments from the Federal Reserve last week has reaffirmed the expectation for a June rate cut. While we are expecting Fed Chair Powell, who said last week that during his that more confidence is needed before the central bank is ready to lower the rate. Now we are hopefully expecting that this has some significant impact on the market, as we are blindly seeing that being tested on a very important support. And the Bank of Canada also held the interest rate unchanged at 5.0% for the fifth consecutive meeting last week, as widely expected. However, the Bank of Canada Governor T. McLean has said during a press conference that it's premature to cut interest rates until there's more progress in taming core inflation. Now we're expecting a move to the upside following this resolute support zone at 1.35077, which is expected to be at about 30 pips from that point, of course, which is good money. And that's our technical analysis on today's currency pair. Now let's move over to the stock markets. Hello, welcome back, guys. And on today's stock market, we're having a dig at Wizz. And we're seeing the Wizz Air Holdings, the aircraft giants, and also part of Rainer Air have both announced stronger passenger figures for February, partially thanks to the month's extra day. Now, some 11.1 million people traveled with Ryanair over the month, which has been up 5% on last February, with load factors remaining the same at 92%. The airline reported on Monday, Wizz Air unveiled a 16% increase in passengers to just shy of 4.4 million. Meanwhile, we saw a 3.3% fall in load factors to 90%. And according to Liberum, the reallocation of jets due to the Israel-Hamas conflict and fewer groundings than expected from inspections of Pratt & Whitney engines has bumped capacity up for Wizz, and which is currently what we're seeing right now on the chart. It's gradually heading to a very important resistance zone, and hopefully might break off from this zone and head to a newer, more better zone. And we are expecting nothing less than at least climbing 150 pips, 708 pips plus from that point, which is actually amazing, and of course, good money. And that's our technical analysis on today's stock market. Wizz, I remain your host, Nick. Bye for now.